Hey guys, I'm back. It's Dr. Tanya with tsjfinancial.com. I've been on a little hiatus. I've had a lot to do. I've been a caregiver for my mother for the last 6 months. So now things are kind of getting back to normal, and I'll be back bringing you all the best news and information that I can. So I have 3 things I want to talk to you about today. The first one is I want to touch base and let you know just how serious this game of taxes, tax preparation, tax accounting can get. So we're going to talk about the July case. It's a criminal investigation coming from the IRS. It's the tax case of the month for July 2024. It's a good one too. The other thing I want to talk to you about are all of those, and bear with me, all of those ERC credits that everybody was getting and applying for that didn't necessarily qualify for. Well, the IRS has reopened the voluntary disclosure program to help businesses and business owners with problematic employee retention credit claims. So they're sending up to 30,000 letters to address more than $1 billion in errant claims. Now, for those of y'all who sitting in the back, errant claims means erroneous, fraudulent, just not saying the word fraudulent, and all that good stuff. So anyway, we're going to talk about that. We're going to get into that. That's because I be hearing a lot about that. Oh, you ERC claims, you get the employee retention credit. If you don't qualify for it, no, you can't. And what do you think employee retention credits are for? If you're not running a payroll, you don't have any employees, so it doesn't apply to you. Boo-boo, stop playing with these people. Then the third thing I want to talk about is I'm going to address my truckers. My truckers. So there's some new information out here for truckers. And let me find it. Okay, here we go. So it's IR 2024-214. The IRS reminds truckers of upcoming tax deadlines. So we're going to get into that. Just to give you a little snippet about that, this regards heavy highway vehicle use tax returns, which are Form 2290s, and they are filed by those individuals who operate large trucks and buses, and there's a deadline of August the 31st for you all to get your returns filed. The tax applies to highway vehicles with a gross weight of 55,000 pounds or more. So if you drive a truck, if you drive a big rig, then yeah, you're going to need to get into that, because them folks going to be looking for their money, all right? So anyway, you don't want to be like macaroni Tony and be down there doing them 30 days, 60 days, or how many other days they're giving you into jail these days for not, doing the right thing. Okay. So let's get started with this IRS criminal investigation tax case of the month for July. Oh my gosh. Ugh. It's terrible. People will find a way to do and get away with just about anything. I mean, it's ridiculous. So, here's the case. The July tax case of the month. All right. This is brought to us by the IRS Criminal Investigation, or CI unit, okay? Tax case of the month. August 14th, 2024. So Texas tax preparer was sentenced for $2.6 million fraud scheme. So let me tell you a little bit about what this nut done did. Okay. A Texas tax preparer was sentenced to more than 6 years after he admitted to orchestrating a multi-million-dollar tax fraud scheme. This is how it goes. So the IRS CI investigation revealed that Anthony Tony Floyd filed approximately 400 fraudulent tax returns, resulting in a tax loss of over $2.6 million. Floyd's fraudulent returns included fabricated W-2s, fictitious charitable contributions, and non-existent dependents, often for individuals working in catering, lawn care, and interior decorating professions. So in other words, seems like a lot of these were people who, I would also lump barbers, beauticians, or stylists, because these individuals normally get paid, in cash, or pay themselves cash or Cash App or whatever, and they don't employ themselves. They don't pay themselves as employers. So this kind of comes under the heading of like gig income, gig economy, stuff like that, where people don't typically run a payroll for themselves. They should, but they don't. So anyway, moving on, Floyd recruited clients and obtained their personal information, including their income and deduction details, through text messages and conversations. Halt for a second. First of all, we ain't even supposed to be, I say we, authorized tax preparers for the Internal Revenue Service. We are not supposed to be taking client information or doing any type of intake via email, via text message, via any type of unsecured manner. So if a person isn't coming and bringing you their stuff and putting it in your hands, you should not be receiving or asking or requesting your clients to send you W-2s or 1099s or W-9s or I-9s and W-4. You should not be asking for any of that information that contains sensitive information like Social Security numbers and things like that. So the IRS has been putting in fail-safe things and stop gates, and been letting us know, hey, you need to have certain type of compliance protection. You need to have, prove that you have security protections in place, for your client's benefit as well as your practice benefit. So like whoever's sending folks text messages and emails with your personal information on it, stop it. Not good. And then you'll be sitting on the TV because somebody done stole your identity and they're over there somewhere and got you $1 million in debt for some stuff you don't even know about, nor can you pay for. But anywho, I digress. Just letting you know, if your tax preparer asking you to send you stuff via email or via text message, don't do it. Just a little free 99. Okay, so he read it. So the story, the article goes on to read. Floyd rarely met his clients in person and often submitted fraudulent returns without reviewing them with the taxpayers. Floyd then diverted all or most of the refunds to his account. Baby. Child, let me tell you. It's not that serious, okay? It is not that serious. For one, as tax preparers, we should always send the clients a copy of their return. Have them to look over it. Have them to review it. Does it look okay? Have I missed anything? Because here is the misconception. The misconception is that taxpayers think that once they give the tax preparer or their tax accountant documentation, like, we are not Houdini. We do not, we can't make, stuff up. It is not our job to try to figure out what it is you're trying to do. Okay. It is our job to file and report what you provide to us. Ooh, I'm getting hot, y'all. We file what you give us. If you are responsible, the taxpayer is responsible for their information. So don't try to put the burden and the onus on the tax preparer. If you didn't do something that you were supposed to do, that's not fair. Because any other business, if you go to these bigger companies, let's say you have a small, tax preparer, or you use a small tax accounting business, and these individuals we have intake processes just like H&R Blocks and just like Jackson Hewitts and just like Liberty Taxes. However, if you're smart in what you're doing as a preparer, a small business, you will make sure that you have some type of electronic or automated intake process, right? And by intake process, I mean I send out, personally, I can speak for my own business. I send a secured link, and in that secured link, my clients receive three things. It's a tax organizer for individuals. There's a tax organizer for for-profits businesses, and then there's a tax organizer that I've created for my nonprofits. So depending on the client classification, that's the tax organizer that they would get. That organizer, that invitation is sent every year. I send out a request, and that request goes to the preparer's email through again a secured portal. They have to accept the invite. You only have to accept the invite once, and then after that, any type of communication goes through that process. But anyway, in that tax package, there's a client engagement letter. That client engagement letter spells out, it spells out basically the type of the services that we are providing. It gives you a cost or the cost details of how much it's going to be. There also is a disclaimer in that client engagement letter that talks about the fact that the taxpayer, this business, is only responsible. We're responsible for preparing your taxes as accurately as possible. However, we are not responsible for any errors or omissions that may have resulted or may result because the client did not provide information. We're only responsible for filing what is provided by the client. Catch that T. If you don't give it to us, if you don't submit it through that portal, if you don't upload your documents in the system is very intelligent, so it will recognize documents as they come through. It will automatically recognize that, oh, this is a W-2, this is a 1099, this is a whatever the case may be. So it's very intelligent. But if you not being intelligent enough to know your own situation, and you're expecting that a tax accountant or a tax preparer is supposed to come back and forth and tell you, you need to send me this or you need to send me that or the other. That's not how it works these days. That's not how it works if you go to one of these other firms who are processing hundreds and hundreds and hundreds of tax returns a day. And it becomes very complicated. It becomes very time consuming. It becomes very burdensome when you have to stop and start and stop and start and stop and start a return. It throws, it puts you behind schedule when you're having to do all that stuff. So I said all that to say this. If someone is preparing your taxes, the one thing that they should do when those taxes are over before they transmit your return is they should let you know that your taxes have been prepared, and through that secured link send you a copy of a draft of your tax return. You should then review your return, review your draft, and if you see something that is missing, something that you think should be there, if you see there's something you forgot, that is the time for you to notify your preparer. Oh, wait a minute, I forgot something, da-da-da-da-da. Now, on the flip side of that, when a preparer gets on your return and they have completed your return, now for me, something I'm going to institute and implement moving forward is when you send me your information and I start working, or my business, we start working your return, if we have to continuously stop because you're continually sending us information, there's going to be a fee for that, because that stops, that prolongs, that hinders the process. Whereas we might be able to process, 7 or 8 returns within a particular time frame. If we have to constantly keep stopping to go back over here, one, it's time consuming. Two, it also can cause us to lose focus on where we are, because we may have moved on to the next thing. And by moving on to the next thing, now you're coming back with all this stuff. Now we got to stop that. So it just opens up the situation where there could be errors that are made through no fault of the preparer, outside of, we're having to stop, start. So moving forward, I won't be doing that anymore. So I said all this to say, in this particular case of Mr. Tony Floyd and his $2.6 million fraud case he just got slapped with, you should be reviewing your returns with your tax preparer. And if you're not, at a minimum, they should be sending you a draft copy for you to look at and to review, so that if you have any questions, they can respond and answer those questions appropriately for you. I've even gone far enough now as to once I finish with my clients' returns, if they are not physically available, we do a Zoom call. So we have a follow-up where we kind of close out their tax preparation process through a Zoom call. So it's very interactive. I share my screen. We go through the returns page by page, number by number, and I really like that process. So I encourage you, y'all, you have to start being more responsible with your own things, because these are your things. And I'm not going to jail behind no erroneous taxes. Okay, so you ain't got to worry about me, Craig. You ain't got to worry about me. Okay, moving on to the next thing. Oh my gosh. These employee retention credits, I think y'all got it wrong from the very beginning. I think some of it wasn't so much you getting it wrong. I think a lot of it was the information was put out there and people had thought in their mind that they qualify for it. But then that's as far as I can let you go on a pass with that, because doggone well you ain't got no payroll to be running and you don't have any employee. So who the heck is you trying to retention? Okay, anyway, but that's another story for another day. Well, according to the IRS 2024-212, the IRS reopens voluntary disclosure program to help businesses with problematic employee retention credit claims. So I've already told you they've sent out 30,000 letters. Honey, when I say they are ramping up they junk, these audits are hitting like never before. I'm seeing it personally. Right. Anywho, the IRS announced today a limited time reopening the voluntary disclosure program to help businesses fix incorrect employee retention credit claims as the agency continues compliance work. Two key words there: fix and compliance. Compliance don't mean nothing but auditors, okay? Anyway, moving on. The Employee Retention Credit, ERC, Voluntary Disclosure Program, VDP, will run through November 22nd and allow businesses the chance to correct improper payments at a 15% discount and avoid future audits, penalties, and interest. Now, I don't know about y'all. 15% is a lot of penalty. That's a lot of interest. And that interest hits every day. Interest and penalties hit every day. So every day at 15%, my God, today. Anyway, during the first disclosure program that ended in March, there were more than 2,600 applicants from ERC recipients that disclosed 1.09 billion with a B of credits. So, yeah. To underscore the importance now of participating in the voluntary disclosure program, the IRS also announced it plans to mail up to 30,000 new letters to reverse or recapture potentially more than $1 billion in improper ERC claims. Thousands more mailings on additional questionable payments will be made in the fall. I ain't got nothing else to say on that, y'all, but this: if you file them fraudulent claims for that ERC credit, honey, you better be getting up with these people right now. Get with whoever did your taxes and whoever filed that fraudulent junk. And y'all need to be doing some reverse engineering before you go to jail. Anyway, moving along. Let's help our little taxpayers, our truck drivers. For my truck drivers. Where my truck drivers? Where my truck drivers? Okay. A little bit of tidbit, something to help my little truck drivers. Let's see. Oh my gosh, I am loving this. I'm loving being back in the seats, baby. Because this is good to me. I love to give good news. News you can use and all of that. All of that. All of that. Okay, well, doggone it. Okay, give me a second. This is me acting all crazy. Shh. T'Challa, be quiet. Yes, but yes. All right, here we go. So, Big Brother IRS, according to IR-2024-214, the IRS reminds truckers of upcoming tax deadline. So let's get into it. So, the IRS is reminding those who operate large trucks and buses that the deadline for filing Form 2290 Heavy Highway Vehicle Use Tax Return is Tuesday, September 3rd of 2024 for vehicles used in July of 2024. The usual August 31st deadline is delayed until the next business day because it falls on a Saturday this year. So, the tax applies to highway vehicles with a gross weight of 55,000 pounds or more that are registered or are required to be registered under law. Now, what does this mean? Okay, taxpayers must file Form 2290, the last day of the month following the month in which the taxpayer first use the vehicle on a public highway during the taxable period, regardless of the vehicle's registration renewal date. Remember that. The annual taxable period runs from July 1, 2024 to June 30, 2025. So there's a little bit more information that they provide in saying that vehicles first used on a public highway during the month of July 2024 must file Form 2290 and pay the appropriate tax between July 1, 2024 and September 3rd, 2024. For additional taxable vehicles placed on the road during any month other than July, the tax should be prorated for the months the vehicle is in service. So, yeah, there's a tax table and all of that. Go to irs.gov and they have a tax table to help determine the filing deadline for you based on when you put your heavy use vehicle on the road. The IRS is also encouraging you to e-file this Form 2290 to as much degree as possible because electronically filing through a provider participating in the IRS e-file program for excise taxes makes a stamped Schedule 1. That Schedule 1 is your proof of payment, available in minutes once the return is accepted by the IRS. So, generally, a stamped Schedule 1 is required when registering vehicles with a state or entering a Canadian or Mexican vehicle in the United States. So basically what they're saying in a nutshell is if you, to a much degree as possible, if you e-file, your e-file is your official e-file stamp that your return has been filed. And with most things, with most e-files, if you file an e-file, if it's a small return, it's not very complicated. You e-file it. Once it gets transmitted, it's transmitted to the federal and the state, and then it's pending acceptance from the IRS and whatever your state is. If you're in a tax state, a state that has a tax structure. But at any rate, once it gets accepted by the IRS, boom, that's your stamp. So you will also be able to receive a copy, or you can ask from whoever filed it, or if you filed it yourself. You also get e-file confirmation letter gets generated for every e-file. So you can also have that as kind of like your backup documentation as well. Be quiet. So just know that it's good, and it's a lot better a lot of times to just file, e-file to as much degree as possible. So yeah, I think for the most part that was a lot of information. I try to bring it to you as quickly and concisely as I can. I've missed everyone, but I'm back. I got to get back into my content. I got to get back into my flow of things, and become more consistent again. I had been, but my mommy comes first, so I have to take care of her. And so I'm going to be back at it. But anyway, I did want to stop on this beautiful Saturday. Saturday is Sunday. Lord have mercy. Okay, it's time for me to go, y'all. I hope that this is some information that you can use. I hope if you can't use it, you know somebody that can use it. Share it, share the wealth, and just continue to, watch my content. Follow me on YouTube. You can also check out my website, www.tsjfinancial.com, or our Facebook page, tsjfinancial.com. I'm sorry, TSJ Financial Services and Consulting. I'm losing my mind now. It's time for me to check out. But, all right, get on your taxes, handle your business, and I will see y'all the next time. Bye.